told you there's a new mortgage trend that could possibly keep you paying your mortgage even while you're collecting Social Security. Today, we're getting into Trump's 50-year mortgage madness and why, if you believe in building wealth, this is definitely not something for you. With that, welcome to the Wealth Twin Show. Nadia, let's dive into it.
When I first heard the news of this 50-year mortgage, the first thing that occurred to me, and probably unfortunately, is that this is modern day sharecropping. For those of you who don't know what sharecropping is, it was basically given as a path, as a way for slaves in order to start owning a piece of land, right? But what usually happened was that when they were growing their crops as a way to try to start paying the rent on that land and eventually to buy that land, it never worked out for them because they were captured in a cycle of debt that lasted for generations, that always put them in debt and never gave them the possibility of actually owning their land. That is why this 50-year mortgage conjured that same image to me, because you will be in debt for decades before you actually own a home. And you know what can happen in a span of 50 years, especially when it comes to owning a home. This is the thing. If you're thinking you're building wealth by buying a home and you go out and get a 50-year mortgage, most of the money that you're paying on that mortgage will initially go to interest. On top of that, the interest on this type of loan is frankly, it's hundreds of thousands more than it would be on a 30-year loan. This is not going to build wealth for you. It's essentially renting a house that you probably will never own for 50 years. Because right now, the average age of the first time home buyer is 40 years old. Imagine buying a house for the first time at 40 years old and having a 50-year mortgage. That's you not owning that home outright until you're 90 years old. And that is if you make every payment for 50 years. Please tell me, does that make sense? How does that build wealth
Uh,
for people? What do you think,
it
Nicole?
doesn't make sense. Now, when you say it, here it goes when we're talking about debt. Now, some people might say, well, we already have a 30-year. What's the difference of doing
Yeah.
a 50-year? 20 years. Okay. It's basically doubling the 30-year loan, which is already very long. And anyone will tell you, the quicker you can pay off your mortgage, the better, right? Because you don't want to be in debt. The longer you are in debt, the more interest you're going to pay overall, which is going to eclipse the actual amount that you actually paid for the house, which is, say, for instance, you have a $400,000 house that you're looking at. If you have a 7% mortgage rate and you put 20% down, the interest that you're going to be paying over the life of that loan for a $400,000 house is close to $800,000. Now, yes, your monthly mortgage payment will go down just a drop, but most of your payments that you're paying will be going towards interest. And if most of the money you're paying is going towards interest, you cannot build wealth. Like Nadia said, you'll be in a cycle of debt. And the longer you stretch out that cycle, the worse it is for you. Now, another reason why this 50-year mortgage, what I'm calling the madness, is because guess what? Many people wait until they pay off their mortgage in order to retire, right? So if it's a 30-year mortgage, and you bought that house, say, like in your 30s or even earlier when housing was more affordable, people tend to retire around 65 or maybe even 70. Having a 50-year mortgage, you might as well just give up on retirement, right? Because you're never going to be able to retire, or at least maybe, especially the average age is 40. How are you going to retire when you have such a large chunk of your income coming from your job is going towards a mortgage payment? So if you have any hopes of retiring, you do not want to look at a 50-year mortgage because of that.
My thing is this. The reason why they said they're putting out this mortgage right now is because home prices are unaffordable. So they're saying, look, if we offer this new mortgage, maybe buying a home will be more affordable to most people. In the history of the world, never has it been a fact that a person giving you a longer time to pay the debt actually benefits you. Okay? It always benefits the person who's putting out the debt. So don't think that this is something that will actually help you in the long run. It could, but you're changing out a couple $100 a month to stay on the hook for 20 more years. 30-year mortgage is long enough, right? For most people. And a lot of people try to pay that down quicker, right? Imagine adding another 20 years. Who does that benefit? It might benefit you in the beginning because it might be a lower monthly payment and maybe more people can afford a house. But here's the fact. If more people can afford houses, guess what happens to the prices of houses? If the stock of houses does not go up, the price of those houses go up. Okay? So now you have a bigger pool of people who may be able to buy a house, but the price of houses have gone up because there's not more houses available, right? So who does it actually help? Make it make sense. I'm just
You made two good points right there, right? One is, who does this benefit? Now, I don't want to say I'm a conspiracy theorist, but I like to say I think critically. So I'm going to say I'm a critical thinker. Okay. So if you actually see what's going on, and like Nadia mentioned, the housing supply isn't going up, right? Because I don't think it's part of this. I mean, right now, this is still in the preliminary stages. The president actually put out a tweet, but we don't know if there's like any teeth behind this, but it's something that they're actually thinking about as a way to have affordable housing, right? But if the housing supply doesn't go up, then what happens? Now, it's really just a band aid if that's the case. You need more of a housing supply if you really want to actually have affordable housing. Now, let's think critically about this. Are they playing with what the idea of American dream is? Now, I know when I was growing up, when Nadia and I were growing up, it was all about getting a good job, getting the house with the white picket fence and 2.5 children. That was the American dream, right? Now that American dream is being slowly ripped away from a lot of the young people who are stifled with debt from colleges, right? Where they were told you have to go to college in order to get a good job. So they're still dealing with that debt. Then they're saying, okay, the housing prices have gone up. I can't afford a house either. And on top of that, rent prices are going up as well. So if you're a young person and you're feeling that stress from so many different ways, but yet you still believe in American dream, then someone putting out this offer might seem like, yes, this is a way for me, a path forward to actually get the American dream. But if the American dream means you continually being in debt, then yes, that's something you can do. However, if you want to build wealth, and one of the greatest wealth building things that we've had in history was real estate, you can't build wealth if you're in debt for a house. Okay. You build wealth by having equity in a house, meaning the more you pay, not just interest payments, but the actual principal that you're getting back by paying, that is what builds equity. But you're not going to be building equity by just paying on a 50-year loan, especially if you're just paying the monthly amount. It's going to take you years, years upon years to actually start building equity. So you're not really actually building wealth or getting a piece of the American dream. You're just getting fooled when it comes to that. Now, another thing that you have to think critically, like Nadia was saying, who benefits from this? Now, who's the ones lending out the money to buy these homes? It's the financial institutions who we know are having record profits a lot of the times, right? Not only are we talking about more lending options for them, which means more borrowers that they can actually choose from and more contracts they can get out in terms of loan agreements, but also there's been some weird things that have been going on, like consumer protection regulations have been rolled back so that it's more focused on the profits of the financial institutions rather than the protection of the actual consumers. And this is also around the same timing, this 50-year mortgage idea or how to make for housing affordable for more people is also coming at the time where Fannie Mae, which is one of the largest lenders in the country, probably actually is the largest lender in the country, has actually dropped the requirement for credit scores. Now, do you want to talk more about those credit scores?
Yeah, I'll talk about it. So before, Fannie Mae had a minimum credit score of 620, right? But now what they're doing is say, look, we're going to drop this minimum credit score and we're going to take into account other things that could build up a person's like picture as a more responsible borrower, right? So they're looking at rent payments, they're looking at subscriptions, they're looking at utilities, which on the forefront, it does look great, right? Because there's a lot of people who are invisible when it comes to credit worthiness, right? So this allows people who do pay bills on time that traditionally were not counted towards your credit score. Now that stuff is being counted. But here's the deal. The thing is, when you're looking to buy a house, a credit score kind of like determines if you're responsible enough or you have enough bandwidth or financial responsibility to buy something that you should be able to afford, right? So a credit score, good or bad, says, look, maybe you made some financial decisions in the past that didn't work out for you, and now you're trying to build yourself up, or maybe you're still learning from those mistakes, but you still have time to learn. But you should not be able to buy something until you get to a point where, okay, I know how to use credit. I know how to manage my money. I can afford something within my price range and be able to pay it on a timely basis, right? If you get rid of those, basically what I see happening is another subprime mortgage thing, and more people getting taken advantage of unscrupulous mortgage brokers who will try to give you more house than you actually can afford, right? This to me leaves a population of people who at one point were completely blocked out of the market in order to buy houses or anything. Now they're in the market, and now those the credit protections, like Nicole said, have been rolled back. people are saying, hey, look, we'll give you all the money you want in order to put you in debt, right? How does that help you? So, like, I understand in some ways not having a credit score is a good thing, but you got to look at why is this happening, right? I'm not a conspiracy theorist by any means, but when I look at things that are lining up in a certain way, you got to ask yourself, who does this benefit? Yeah, on the outside, it might look like you're the one benefiting because maybe now you have more of a possibility to buy a house. But in the long run, how does that work out for you? Who does that work out for? Because I can guarantee you right now, a bank is not going to take on more risk if it's not in their benefit. Okay. That's just the way that banking works. That's the way that anybody who loans money, look at the casinos. They always make sure the house always wins. And the same thing comes from banking. Okay. That's why I think this is so unusual right now. And my thing is, if you're looking to buy a house, it's better for you to try to save up more money in order to go for a 30-year instead of contemplating going for a 50-year. And I know a lot of people may not want to hear this, but not everybody has to own a house, okay? That American dream may have passed for you, but there's no need for you to try to chase for something that probably is not financially viable for you or even makes sense for you.
Oh man, Nadi, you're hitting me with so much. There's like so many things I want to say. One, right? I like how Dr. What was her name? We were reading something. Dr. Stacy Patton.
Yeah.
She said they're making home ownership a subscription model, and I don't
Ooh,
know a better way to really
exactly.
say it. So she said it. She hit the nail right on the head by saying that it's a subscription model. Okay. Now on top of that, I would add on if you want to buy a house, not only should you be focusing on credit score, you should be focusing on how much house you're trying to buy. Okay, forget about the length of the loan. Ask yourself, can you afford this house? And especially ask yourself if you can afford that house on one salary. Okay, because things are going to happen, especially over a 50-year time frame. You can expect that someone's going to lose their job. Maybe both people might lose their job, or something's going to happen, right? And when it comes to actually buying a house, one of the biggest things people forget about is how long and how much money it takes to actually maintain a house. If you don't factor that in, I don't care if you have a 15-year, 30-year, or 50-year mortgage. If you don't understand the real cost of a house, which is actually the maintaining of a house, you will lose that house from other instances. Okay? So you have to understand a house, for my purposes, I don't think if you're looking for rent stability, maybe a house is an option. But there are many people out there will tell you a single family house might not be the best wealth building to, especially 99, we both own multifamily, right? And on top of that, we believe in the stock market, which is a better way to use that capital that you're going to put down on a house, right? Because once you put your money into one investment, which a house should be if you do it the right way, you lose the opportunity to go into another investment. So think about that money that you're paying over a 50-year time frame for a house, an asset that is not generating you any income because it's a single family house. That money that you're putting in, we're saying like a $400,000 house will be about $1,900 a month. That means $1,900 a month can't go into another asset building, wealth producing thing. So talking about business, talking about stock market, talking about bond market, anything that can give you some type of income and also grow in terms of value, that money cannot be put towards that because you're putting it towards a house. So if you're interested in really building wealth and you want to make sure that you're actually capturing the most that your money can get for you, a single family house is really not the best way to do that, especially if they're making it a subscription model.
I just want to ask you guys, I'm not trying to be pessimistic or anything, but ask yourself, are Americans becoming healthier? Right? Are we living longer and becoming healthier? Because what's the probability of you losing that house in the 45th year if you pass away? And maybe your kids or maybe your grandkids, because 50 years is a long time, can't afford that house and keep paying those payments. That goes back to the bank, right? So you have 45 years of paying down on a house that you wanted to keep in your family. And then after the 45th year, maybe something happens and you can no longer pay for the house. What happens then? You, instead of looking at longer terms for a loan, look at more ways on how you can make that loan shorter. What do you need to do on your side? Do you need to save up more of a down payment? Do you need to buy less of a house? Do you need to maybe move to a lower cost of living area, right? So that you can afford something that it's less danger of you losing it, right? That's what you need to look at. Don't look at like, oh, they gave me a longer long term, so now I'm able to buy something. And instead look at how can I fit into a way that I don't need that extra thing because that's not going to be in my benefit, right? You have a lot of young people that this is going to be focused on. You have a lot of people who have been disenfranchised for decades that this is going to be as a new option for. But is it in your benefit? I don't think so. Try to play in a way that you win the game, not the bank wins the game. And not that your family loses out if that house gets taken away because you missed a payment, okay? My thing is this: there are better options for you to do this. And if you're looking to build wealth, a 50-year mortgage is the exact opposite of it because you're keeping yourself in debt for 50 years. And you must like working for somebody else because you'll be working the entire time to try to pay off this house.
This is just highlighting to me that all that glitter is not gold, okay? And also that wealth building principles, no matter throughout time, have always really been the same. And if you stick with those wealth building principles, no matter what the new trick or the new thing is, it will keep you grounded and help you build wealth. And those wealth building principles are simple: make as much money as you can, right? Stay out of debt or get rid of the debt you have as quickly as possible. Save more than you spend, and then also try to buy assets that grow in value and give you an income. If you follow those principles, you will also have a great credit score. You will also be able to build wealth, and you won't have to worry about these new things that are coming out that can just will actually hurt your family rather than actually help them, right? Because on top of that, anyone that chooses this, I don't care if you have the 30 year or the 50 year, when it comes to you buying a house and you want to use that for generational wealth, make sure that you're protecting that asset. Even if you don't have the mortgage payments paid off, or even if you are able to pay it off, if you don't have a trust or something like that that passes down the assets, you have done all that work for nothing. So that's another thing to keep in mind. If you want to build wealth, you have to learn how to protect wealth at the same time.
Now, I know you guys might be saying, twins, it's easy for you to say because you already own a home. And you know what? That's kind of true, but we had to work in a way in order to save enough down payment and make sure that we took way less than the bank was going to offer us, right? Your job in order to buy a home is to make sure that you are taking as much advantage of the situation to buy a home and not being taken advantage of. We're telling you this because we really do care about our subscribers and we care about the younger generation and the people who do not have enough money and say, home affordability is out of control. We completely agree with this. But given a 50-year loan, it's not the answer to that problem. That's not a solution. That is going to create more of a problem, right? Why don't we work on the other factors that's actually contributing to people not being able to buy a home? Where's the home supplies, right? What can the government do other than extending you more line of credit to put yourself in more debt that will actually help the American people actually be able to afford a home, right? This is the first time, I think, ever that a 30-year-old is doing worse than their parents were when they were 30 years old. And this is common knowledge. We know it's harder right now. But what can the government do other than giving you more debt to put yourself in to help you make a better dream and make a better life for yourself in this country? Because I can tell you right now, giving you more debt in order to do it is not working out. The same thing happened with school loans. It's not going to help you.
Now, Nadia had the doom and gloom, and yes, the 30-year-old has a worse life than the 50-year-old. Their parents had it, things like that. But also, this is the best time in history to ever make money. This is the
I
easiest
agree.
time in history to ever make money. But if you try to do the same thing as your parents or your grandparents did to live the same life, then you're going to be left behind. You have to learn the new skills that's going to pay you the amount of money to get ahead. Okay. So, although, yeah, that's the situation, do not think that this is a time where you should be pessimistic. This is an opportunistic time, but if you keep those wealth principles in mind and understand that there's opportunities right in front of you that will allow you to make as much money as possible and the easiest as possible. There are people making money from sitting at home. Okay? So with that, you have the opportunity. You have to think differently. Don't think of the traditional ways that people did in the past. It's a new way to make money. It's a new way to build wealth. So do not keep focusing on the American dream of the past. There's a new American dream and it's open to you. You just have to understand the new rules and understand the constant wealth principles, and you can achieve the new American dream, which I'm very positive about.
Now, guys, if you made it this far into the video, we thank you for that. And we want you to know that we found out that over 50% of the people who watch our channel do not subscribe. It's free to do and it helps support the channel. If you find any value in the videos that we put out for you in your wealth building journey, make sure you subscribe to the channel because it allows us to reach more people and speak about more topics that we know that people who are trying to build wealth for themselves and change the trajectory of their family actually care about. Okay? And with that, if you want to learn more about building your wealth, make sure you join our newsletter called the Wealth Pack. It's free to join, and we teach different principles of how you can start on your financial journey to make sure that you are doing better than your parents were doing.
And with that, guys, if you enjoyed this video, please give it a like, share with someone you care about, and subscribe to the channel. And we'll see you in the next video, which will be here, and we'll be there to welcome you in.